Hello, this is Manesh Patel with IMTF Trade. Today we're going to talk about how to use the IMTF indicator for earnings and how to do predictions and forecasting for earnings. We're specifically going to look at the IMTF crosses in the IMTF indicator to start looking at earnings. To look at earnings, the best time frame, to believe it or not, to look at is the weekly. Then you could sit there and look at the monthly and then the daily if necessary. Okay. What you're looking for are kind of signs and clues with the multiple time frame crosses. Now, there's various different strategies out there. I'm not going to cover all of them today. There's post-earnings strategies where basically after earnings announcement occurs, then you start looking for a trade. Then in pre-earnings, which is what we're going to discuss today, we're going to look at it like a day or two before earnings announcement and start to look to see where it's going to go from there. Some people look at it 2 weeks before, some people look at 3 or 4 weeks before, and so forth. There's various different strategies. In fact, in our options university, we go for all of them there. But today, what I'm going to do is I'm going to kind of show you a live trade that we took, which was Under Armour here. So here's Under Armour here. An earnings announcements was predicted a couple of days ago in the next week, but it actually turned out to be earlier. Okay, so we saw that notice from our earnings announcement that it's coming up, and on this bar right here is when we saw that basically earnings was coming up after market earning hours 2 days ago. So if you look here, this is the daily time frame. Weekly really didn't give us a clue, and the reason why is because of this price action here. It looked like it broke out here and was just kind of consolidating here to go up. Okay, one key thing is that we notice is this bar right here closed below this line here, which is the multiple time frame resistance that started the whole thing going up. Okay, so that was the critical thing. We closed below there, and then the day of earnings after market, notice how price action was kind of holding that level here, which was showing us signs of being bearish. Not only that, we had a multiple time frame cross right there above us to indicate that basically this had a high probability of going down. So this is where we look for options, and when we do our earnings, we're looking for low risk, high reward. So we're going 2 or 3 strikes out of the money, and since this is a daily time frame, we're typically going about 2 or 3 months out. So that's what we're looking for as far as the Under Armour trade here. And you could see it kind of did go down drastically, and if you look at it here, yes, they closed below these crosses right there, which is critical. So it still has potential of going to the downside. It still has potential to come and fill this gap here, which is kind of what we're looking for it to do long-term basis. Okay, let's go look at another one. Adobe. This one's not announced yet, but we pretty much have gone bullish on this one, and I'll kind of show you why here. And remember, you're trading probabilities here, right? So if you're doing earnings announcements or pre-earnings, you're kind of wanting to put a couple of these on there where you're trading probabilities, because all it takes is one winning trade to sit there and take care of all your losing trades, assuming you've kept your risk the same on all the trades, and also the risk is low when you're taking these trades. This is Adobe on the weekly, and you can see earnings is coming up. What we like about this is this week, we have a multiple time frame support right there, but remember that the weekly bar is still not closed, whereas on the other one, it was a daily and it was closed. The week before, we have a multiple time frame support here. And notice one thing, you had multiple time frame resistances going down, then all of a sudden you had this bullish bar and then a multiple time frame support. So this is action here that indicates it's bullish, so it's worth us looking at for this thing to go bullish here. And you could see this week here, which is earnings announcement, you could see it has a multiple time frame cross to go bullish at this point here. So we're looking for it to go bullish and at least to get to about right there to 267.41 is what we're looking for. Since it's weekly, we're looking at this little long term, so anywhere from 4 to 6 months is what we're looking at. The other one we looked at, which we did not take a trade, was Costco, and I'll just kind of go for why. Just waiting for it to pull up. You can see there's multiple time frame crosses here, which is leading into a lot of confusion exactly what it wants to do. So there's no clues there what's going on. On a daily time frame, you'll see those multiple time frame crosses causing a lot of confusion here too. So you could see here there's not really much going on. 1 minute it looks like it wants to go bullish because it goes above these crosses, then it goes below it here, and you still got a couple of days to go before earnings too. So you don't know exactly what this thing's going to do, because you also have multiple time frame supports and resistances at the same time. So this thing's just consolidating like crazy. Let's go to monthly. And on the monthly view, you could see there's a multiple time frame support right here the month before. So if you're an aggressive trader, you can sit there and go bullish on this here. If you're conservative, you're just going to walk away, because the weekly is kind of giving you a lot of confusion and mixed signals as it is. Okay, so this gives you some examples on how you could use the multiple time frame support resistances to predict earnings 1 or 2 days before. There are other strategies for earnings too, but this just gives you one example there. If you have any questions, feel free to send us an email at info@eiicapital.com. Thank you and have a good day.